Morning, everybody. It's 8:10 a.m. Welcome to my channel. It's a Monday morning here. Hope everybody had a good weekend. Now the markets are basically in flux. They're in balance. There's so many headlines, and all the markets are pretty much, all sectors are pretty much in ultimate balance. So you can tell out there, it's just really just uncertainty out there. I mean, the markets are telling us that. So here we are in balance. All right. So we made a May one of the highest returns in May since I think the 90s, because May is usually seasonally bearish. However, markets usually bottom in June's. We'll have to see. Seasonality isn't an exact science, but it definitely is there for a reason. Pretty much earnings season is done, the big ones. Okay, I think we do have Broadcom this week. That's the only one that I would say. Let's see here. Or did I? Yeah, I think it's the May 5th. I think they report. Don't quote me on that. All right. So that's what's going on with this market. We have a new level in the ES. So you'll just see how imbalanced we are for the year. We'll go over that in the hourly charts. All right, without further ado, welcome to my channel. My name is Steven Gonzalez. I use market profile and volume profile to find structure in the markets, along with supply and demand, gamma exposure levels, the most traded price of the year, the month, the week, and the previous day. All helps me find structure in the markets. That's my edge, along with anchored VWAPs, and of course my trusty market internals, which show me what's going on under the hood once the market is open. Okay, you can always see what I'm feeling in my Discord. Okay, Confluence Trading. All right, now every morning I give you guys the story of the markets, right? The market news, the economic calendar, the leaders and the laggards, as well as daily chart analysis, the triple-headed monster, your bond, your dollar, your VIX. Then we go into the lovely, I really like this 1 hour chart analysis, give you guys some key levels and structure to look at. And then we do long and short trade scenarios in the NASDAQ and the ES futures. Okay. And then, if you want to join my Discord, when the market opens, you can get my feelings on the market. Okay. I'm very rarely wrong on my read on the market, mainly because of the internals. Right. Markets can't outperform their internals. They're gonna give me what the market's capable of. Now, that's only a snapshot in time. Obviously, always think markets can get weaker, markets can get stronger, but generally, a good after 15, 20 to 30 minutes, I have a good idea what the market's capable of that day. Okay. All right. Let's get into the futures. Watch this. See what's moved markets today. Okay. Now, Bitcoin is pulling back here. All right, they're pulling back. I think went up to like 112. All right, so they caught a bit a little bit. All right, but that's what they're doing. That percentage is obviously probably wrong, but they're up. All right, but they're definitely pulling back. We can take a look at that in a little bit. The VIX is up 5.49%. We're at a 19.59 VIX. Crude's getting a lot of love right now. Now, I know that there's tensions escalating between Ukraine and Russia, but OPEC just decided to increase production, which generally is not good. More supply is not good for oil, but it's moving higher. Okay, gold up 2% today. Silver's up 1.47. 10-year yield is up 0.27. Russell's down 0.15. The Dow's down 0.22. ES down 0.31. 30-year bonds being sold down 0.33. Nasdaq's down 0.47. Dollars down a 0.5%. Right? Gold rising, dollar falling. That inverse correlation right there. Ethereum is down 3.55. Okay? That's what's going on there. Mag 7 Plus. Let's check it out. Boeing leading the pack, up 1.17%, followed by Eli Lilly, and then Coinbase. Okay, now lagging, we'll start with just the bottom of the list. Netflix down 0.40, Apple's down 0.48, Nvidia down 0.62, Tesla's down 1.33%, and the lagger here is Google, down 2.15. I'm not sure why. Maybe we can look into that later. But that is down 2.14. That should take down communications. We'll have to see. Okay, let's look at those sectors. You know, quick flash of top sectors. Let's just see. You can see Exxon, United Healthcare, and Chevron leading the pack here. And the laggards, you got Salesforce, Disney, Walmart, McDonald's, laggards. Okay, sectors. Moving on here. Energy. Energy is leading the pack, obviously with crude ripping. Okay, followed by basic materials. So there's some mining stocks that are rising. Obviously gold, right? Healthcare, the United Healthcare, that is up, but the overall sector is only up 0.06. Then you got a bunch of laggards here. We'll start with the bottom here. Discretionary down 0.36. That's your Amazon, your Tesla, your Home Depot. Communications, there you go. There's your Google, your Meta, your Netflix. Financials, there's your Berkshire Hathaway, your JP Morgan, your Goldman Sachs, your Morgan Stanley. And here's your risk off indicator. Semiconductors are your laggard, down 0.52. Of course, I think everybody knows what those are. Nvidia, Broadcom, AMD. Okay, there we go. That's what's going on this morning. All right. Now, we're going to get right into the economic calendar. All right, let's look at this week. All right. So today at 10 a.m. we have ISM. All right, followed by Fed Logan speaking 10:15 a.m. Followed by Fed Goolsby. Tomorrow we have Joel's Jobs, more Fed speak. API crude at 4:30. Wednesday, there you got the mortgage rate coming out. All right, ADP employment change. Fed Bostic speaking at 8:30. ISM services at 10 a.m. Okay, and then crude inventories 10:30. Thursday, initial jobless claims, Fed Harker. Friday is the big one, non-farm payrolls and unemployment at 8:30 a.m. That's our week for the economic calendar. All right, let's look at some news. Now, Trump is putting tariffs on steel and aluminum. And let's just look at this together. Trump says he plans to double steel, aluminum tariffs to 50%. Okay, let's see here. Tesla executives question Musk after he denied killing 25,000 EV project. All right. Google says it will appeal an online search antitrust decision. Maybe that's why Google is down. Okay, let's look at this. This is in commodities. All right, let's just read this whole thing. Stock futures in the dollar slipped as after President Donald Trump announced plans to double tariffs on imported steel and aluminum to 50%, amplifying concerns and uncertainties. European shares, too, came under pressure on global trade tensions after recording 4% gains in May. Japan's Nikkei ended lower on trade worries and a stronger yen. In the commodities market, oil prices jumped over 3% on OPEC Plus Group's decision to raise output in July, at the same level as the previous 2 months. Gold firmed more than 1% on fresh tariff jitters. The day ahead in economic indicators include S&P Global and ISM manufacturing PMIs for May. All right. Let's see. Boeing, they're up. Why are they up? Tata Group's Air India is in talks with Airbus and Boeing for a new major aircraft, including some 200 extra single-aisle planes. There you go. All right, let's look at here. And it looks like Charter Communications, Bernstein raises target price to 410 from 385. CrowdStrike, that's your cybersecurity. JP Morgan raises target price to 500 from 450. United States Steel, JP Morgan raises target price to 55 from 39. Okay, 39. That's what we got going there. Now let's look at the juice. The juice already has some things in here. Let's see. EU is poised to curb China's access to medical device procurement. It says U.S. Treasury Secretary Bessent. I believe Trump will talk to China President Xi very soon. All right. All right. I think we're good here. I don't think I need to go into anything else here. Let's look at our breadth charts real quick. Here's our percentage of stocks over their 20-day simple moving average. Okay, 57%. So it's half and half, pretty much, a little more than half. This is our little breath indicator. Okay, just to look at that. And we got our bullish percent index. All right. 69% of stocks are on buy signals in the S&P 500. All right, let's look at the NASDAQ 100. 77% of stocks on buy signals. All right, and then finally, we'll just look at the NYSE. This is the overall every stock. See, 57%. That is very interesting because that lines right up with the 57% of stocks above their 20-day moving average. That just moves in line with all the markets I looked at this weekend. It's like everything's in balance, and that's why I said there's uncertainty. Okay, we will get a big move. It's just a matter of when. That's all it is. A matter of when. Let's just look at the Fed Watch tool real quick. All right. Now, the next meeting is June 18th, and there's a 98.7% chance of a pause. So still no cuts. All right. All right. We can move on to daily charts now and just see what is going on, which is not much. We'll go to our trusty SPY first. All right. Now this market put a little scare here, but that's okay. The dip was bought and we pushed back up. Okay, still kind of have that inverse head and shoulders. And you can see there's the previous week's range. We stayed within the previous week's range. We didn't really move out of the previous week. Okay, so now you can see the previous week also. So you can see the weeklies are just lining up together. Okay, lining up together. Basically, you have 3 weeks in a row of consolidation. All right, we're just basing here, waiting for a big move. Now, on Friday, I didn't mention this, but it was the end of the month. And a lot of times, end of the months rip into the close with a little, probably managers of funds and stuff like that get some window dressing so it looks good at the end of the end of the month statement. That tends to happen. Okay, so that happened because look what we did. We closed here pretty much almost flat from the previous day's close. So it was almost nothing to see here after you sold off. Okay, where are we at now? We are at 587.30. 587.30. Yeah, you're almost at the midpoint of Friday's range, which is horrible. Location. Okay, let's look at futures real quick. Here's futures. You can just see we're just moving lower, but slowly. Slowly. Okay, you can see the 90 EMA daily is flat. That just tells you right off the bat you're in balance. Okay. Look at this, just indecision in these markets. Okay. Moving on to the Qs. So here's our Qs. Q, same thing. Dipped below the 90 EMA daily, closed above the 90 EMA daily. But this is the one that you tried to break out and failed. Right there. You did break out, but you couldn't hold it. Okay. Where are you now? 516. Let's call it 516.30. This is 516.30. Right here. Almost at the mid of the session as well. Not great trade location. Let's look at futures together. Right there. Okay. Now we have monthlies in here. So that's last month's highs right there. You can see this wick. And that's last month's lows. There's last week's lows. Last week's highs. Okay. So we're in the middle of the model here. Okay, makes it hard to trade, not read, trade. Okay, because there's cross currents, and I'll show you that in a second here. In these markets, there's cross currents. I'm going to show you right now these internals from Friday. Okay, give me a sec here. I'm going to while I pull up the internals, and you'll see what I mean. Okay, so here's the internals for Friday. Now, just a quick briefing. All of these sector boxes up here have their weights, and they're in order of weights in our market cap weight index of the S&P 500. Okay, so input text 31.6% of the S&P 500, market cap weight, financials 14.3, healthcare 9.6, consumer discretionary 10.6. Healthcare actually has fallen. I can move this. It actually moved down, right? So it's kind of equal to communication. So that's really like the top five here. Okay, but regardless, these weights are represented on this graph. That's all you got to worry about. Bars are the weights, right? So look what happened on Friday. You had the overall market was stronger, and look what was weak. Tech. Now this is the end of the day. Let me show you here. If I put this up, give me 1 second here. I'm going to show you in my Discord what I posted, and you can see that it was a lot weaker technology at one point. So this is about 950 right here. 950. Look at tech down 0.66. Okay, so tech was weak. Nvidia was weak. Okay, so just wanted to share that with you because what does that mean? It's a cross current. And then finally, look at this white line, right? Finally, it dipped below and caught up, but still never got that weak, right? Because look at the end of the day. Financials green, healthcare green, communications green, right? Well, it helps when they end of the month, and then you get the rip end of the month window dressing. Okay, my point is this: even if we scroll back, right? See, whenever this white line is disconnected, you have a cross current in the markets. Okay, that's just telling me the overall market is not in line with the market cap weight. And what that does is that just tells you, here's another one. They've been like this. And what does that mean at the end of the day? There's a divergence, right? It's a divergence. It just is telling you not everything's all aligned. And when everything is not all aligned, the market tends to move begrudgingly. So that's what happened. And we're going to get into my trade recap and show you where it's bullish, but then it was bearish. And then what happens is the moves don't happen like they normally would. Okay? They're kind of like they get a lot of fight, and then finally when that fight releases, then it's a big move. But you have a fight on your hands. Okay? You have a fight on your hands. All right? So, with that being said, let's go back to our triple-headed monster. Kind of get deviated there. We'll finish off with the right now triple-headed monster. Let's get right into that bond market. And it's friggin' doing nothing. Okay, let's look at this. Right in the middle of the model. They're getting a little lift today, but you're just in the middle of garbage. 100-day moving average flat, and 200 is flat. That tells you all you need to know. Okay. Now, moving on to the dollar. The gold is rising and the dollar is falling today. Look at that. Now down here, if we hit this 97 again, I'm going to tell you, I'm probably getting interested in some long here. That would kind of be like a double bottom. We'll see what happens here. Okay. Keep your eye on that. Now your VIX is up today. Is it? Well, no, actually it's not. It was earlier. Okay. But we're just in this VIX, in this range. It's a good range to be in. Okay. Good range to be in. Get nice volatility, nice ranges. Remember, 16% VIX is a 1% expected move in the S&P 500. S&P 500. All right. Moving on to hourly charts. Let's do it. Let's do it. In gold, especially in the ES, we got a new level. It's not really a new level, but it's a new. Let's just get into it. All right. Let's get out my marker here. All right. So we are in ultimate balance in ES, and generally that means you can see the price here, 59.15. Run around to the 59.16. We'll just call it 59.15. Okay. This happens to be the most traded price of this year now. Happens to line up with the most traded price of the month and the week. So generally, it's for me, ultimate balance means the most traded price of the month and the week are equal. This happens to have the next layer. It's the most traded price of this year. Now remember, that is your bull bear line. The market tried to go across it and it failed to find acceptance. We are finding acceptance below it. So right now, the bears are winning this battle. Doesn't mean we sell off. Structurally, they're winning the battle. Okay. However, here's your most traded price of the rolling year, 58.21. We're in the middle of two high volume nodes where we could go like this: bounce down, bounce up, bounce down, bounce up, and then figure out what we want to do: all-time highs, or we want to make new lows. Okay. So those are very important levels. If we back out of here and let's say go to a 4-hour chart, and I really zoom out here, and you can see the profiles. Okay, the green is this year and the white is the rolling year. Now it just happened to be that this year we took out the rolling year, so now they're kind of equal. Okay, and you can see the big spike here, that's the most traded price of this year, and the big spike here, the most traded price of the rolling year. Okay, and just see where price has been going between, right? And be honest with you, this, if I looked at this profile and it was a daily profile or a session profile and I saw this, this is what you would call a bullish imbalance to the profile. You have your excess to the bottom and now you can go and move higher. Okay, that's generally how I would look at that profile in intraday, whatever. It's very bullish and balanced. You have excess to the bottom without excess to the top. Generally, you need excess to the top to complete the auction. That's how I look at it. Okay, going back to the hourly, we're going to move on and talk about the NASDAQ. Okay, go to that NASDAQ. Here's our lovely NASDAQ. And most traded price 21435 of the year. Most traded price of this year. That's where these markets just can't get above. They tried right here and failed, right? The NASDAQ. All right, so right in here, that was a wall. And I actually did short the Qs, QQQ, on Friday. Okay, when it was failing here. Now, you can see all that matters is price is finding acceptance below this level. Like I said, that's a feather in the cap for the bears. Doesn't mean we all sell off. It just is telling me in order for me to get really bullish, I want to see acceptance above here. Doesn't mean I just short everything. It just means that I have to look at this and go, I know for me, my structure, how I look at the markets, I want to be above here to really go, all right, I'm looking at longs. Okay. There's what we got going. Okay. Pretty much we're in balance and every market shows this. Okay. Every market shows this. That is your hourly chart analysis. All right. Pretty simple. How I look at the markets. Okay. We are in flux. We are just stuck. Something needs to happen. Okay, something needs to happen. Now, moving on. I'm going to change my workspace here. Give me 1 second. We'll get into the market profile, volume profile section of the analysis here. All right, let's do it. All right, here's our profile. And again, look at the balance profile, right? Boop. Value area, excess to the top, excess to the bottom. We're still in balance. Price is right here. Okay, price. And this gets painted on my chart automatically. See, this says mid. That is the midpoint, the 50% of the session on Friday. Overnight is right at the midpoint. Horrible trade location. Okay, want to get chopped up? Enter here. You're going to get chopped. We will eventually move out of chop, but you're going to get chopped. Okay. Now, as far as what happened on Friday, we opened right here. Okay. Now, I'm going to show you, so I could probably show you right here. Okay. If you just look at this, if I drew a profile like this, that is a bullish imbalance to the profile. I would expect prices to move higher to complete the auction, complete the distribution. Okay. However, you have a big 59.15 is your most traded price of the year now. That big wall. Okay, and what else? Technology was relatively weak, but the overall market was not. Hence, trying and trying and trying and trying. And what happened? Boom, big moves away from ultimate balance. You came down, you partially filled this gap. Then guess what happened? Ended a month. Window dressing punches in and it just ripped back. Okay? That's what we did on Friday. Okay? These levels are on my chart for a reason. They're on my chart for a reason. This is why I would tell you this. Would want to be long with the bullish imbalance in a profile. However, when tech is weak and it's 31.60% of the market cap weight technology, I don't want to fight whatever that's doing. That's what moves our markets, folks. So I had to fight the profile that was showing me, but this wall I knew would be very hard to break. So it was like a battle. I go, my system's telling me overall market strong. My system's telling me, though, the thing that drives our market is weak. Generally, the market will follow tech. And what happened? It did. Okay? But it was not an easy trade. That's why trading's hard when you have cross currents in the market. Okay? Now, we're back to balance, and it's all easy. I'm not saying trading's easy. I'm saying when you're in balance, you just got to look at this. Okay? Here's your balance lows. Pretty much balance highs. You got the big boy level in the middle. And you want to be active in this area. In this area. Generally, in your balance, you want to buy the lows, right? You want to sell the highs. This level, like I was saying on Friday, when you're in the middle of this seesaw, it can go through it and go back through it. However, it did act as that wall on Friday. Okay, so it did act as a very important level. All right, there is a supply zone here we have not been able to take out. Okay, so we'll just get right into scenarios because it's pretty basic. All right, pretty basic. Like I said, horrible trade location where we're at right now. Okay, it's all about probabilities. I don't want to be in the middle of a session while I'm entering a trade. It's just, you're going to get chopped up. Know why? Because everybody who was long and short, it's at equilibrium. It's like you're getting people battling each other. People aren't taking profits at the mid of a session. Think about that. When people take profits, it's usually at support, resistance, right? Not at the middle of a session. Hence why you'll get chopped up. Right? So let's do scenarios today. Okay. Alrighty. So what do we have here? Price is here. I said it. Horrible location in the mid session point of the session on Friday. Okay. So you have supply here. Now, don't get me wrong. I'm going to give you the scenario. You supply right here, right? What I would like a nice selling, but take out the overnight lows. Test this. Now, when I'm saying this, I want the market to do this quickly. I don't want the market to build up weakness. I want the market to quickly move lower. The internals don't get that weak. And if I get a nice bounce, this is month to date VWAPs right here, too. I'm sorry. Scratch that. Scratch that. Because we're in a new month, so this is last month's month to date VWAP, okay? We got a new one right here. So scratch that. I would just seek to see lower highs, and then you can start to make your move up. And you're definitely going to want to take some off here at the most traded price of the year. Now, it's gravy. If you break that, hold, hold, hold. Challenge the other side of balance. Challenge the other side of balance. Now, what else could happen, right? We could just come, rip through with the early volume, hold, find acceptance, and then we can start to move higher. Okay? This, I would only probably be feeling this trade if the technology sector was leading the markets. Okay? There's your bulls. Bull side. Okay? Bear side. Let's remember, underneath this level, feather in the cap to the bears. Feather in the cap to the bears. Okay? Right here. So, what would I look for? Right? Well, if we just fail here into this big level, into supply, and you get lower high, you're going to come through. See this most traded price of the overnight right here? You come through that, you're going to get these longs to cover. Longs from Friday, longs from the overnight. You take out the overnight lows, and then you go to the balance lows. You're probably going to want to take something off here and see if you can catch that most traded price of the rolling year, 58.20. Okay? That's decent right there. The next one would be a little bit of a bull trap here. You break out of this big level, fail to find acceptance, rip back under, hold. You can go lower as well. All right, and then you have balance high. But if we just make it up here, and let me say this, if the market is not super strong yet, it's probably a nice short to go back to balance. Okay, that is your ES. Boom. Hope that made sense. Moving on to NASDAQ. Here's your NASDAQ. We got a balance profile again. Let's look at it. Excess to the top, value, excess to the bottom, balance. Okay. We know we have our 21435. This area here is your monster level. Price is underneath it. Accepting price below a big level, feather in the cap for the bears. Okay, we have that supply zone here at the overnight highs. Okay, but what is it about? What is this market really about? Right here. Let's call this the balance lows. You got a demand zone in here. Okay, we have our major level 214.35. Okay, and then you have this kind of not last week's highs, but the previous week before that highs. In here, you can call this pretty much a balance area high. I know we failed up here. Okay, that's what I'd be looking at, and we're just going to do the same thing. Where's price? Right here. Here's the midpoint of the Nasdaq session on Friday. You're in the middle of the session. Horrible garbage location. I can't stress that enough. As soon as I see that, and let's say the market opens up here, and look at that, the mid of the overnight is the mid of Friday, right? As soon as it opens up, I'm not interested at all. Automatically, I'm not doing anything because I know we're going to chop, and you're going to get faked out, right? So you wait for a move to happen. Okay, let's just get right into scenarios here, and I can wrap up. Let's start with the bull side right here. All right, what am I going to look for? All right, start into the supply, sell off, break the overnight lows, come into this demand zone, quick, and like again, I want this done quickly. I want this done quickly. I don't want the market to gain steam of weakness. I want it quick. Comes in here quick, boop, bounce, higher low, higher low. We go back to the mean, 214.35. Gravy is breaking this level and finding acceptance. Then you can try to test the balance highs. Okay? It's going to be the same exact scheme scenario as the ES. Also, just rip, hold. Like I said, I'm only interested in this if, whoa, tech's leading the market. All right, I want to get a pullback. Okay, this is if internals are like in parity to slightly weak, fast, and tech is not that weak. Then I want to go long. Okay. Now, let's go to the bear side. Okay. Remember, I want away from this chop. So push away, go into this end of the supply, maybe tap this big level, lower high, lower high. You're going to come through. Here's that most traded price of the overnight right here. We rip through that. Probably going to take out those overnight lows and test Friday. Okay. You take out Friday's lows and we are weak and you hold, you can then tap last week's lows. 209.55. Okay. Take that out. You can try to test out 208. 207 is the most traded price of the rolling year. Okay. Now, what else can happen? You can have a bull trap, come up here, think like, oh my God, we just broke that level, and then rip back down, and then you probably don't get that big move. You probably go down to here. Thirdly, you come up to the balance highs up here, and like this, I'd only be interested in, again, if we come up here quick, market's not super strong, and you probably can fade back to the mean. There's my scenarios for today, okay? Hope you enjoyed that analysis. If you did, please smash that like button. All right, be much appreciated. And of course, you can join me every day. Every morning, you get the story, you get the lowdown from myself on the markets. Leaders, laggards, economic calendar, market news, all that jazz. All right? All that. So hopefully you enjoy that. Okay? Now today, I have a doctor's appointment in Philly. So that's about noon. Probably gonna stick around a little bit in the market early on, but then I gotta go. So I might not even have a trade. Okay. So hopefully you got the plans. All right. Let's follow them. Follow your own plan. All right. Remember, no trade's a trade. Hopefully everybody stays green. Cash is a position. All right. And these markets, next man, these markets are in flux. In flux, right? There's uncertainty. So I would probably think today we have a disconnect. Again, most likely in internals, where there's going to be probably a disconnect. My favorite market to trade is when everything's on one side. Movements become easier. All right. Otherwise than that, everyone have a great day. And if you want, I will be in Discord probably early on. My Confluence Trading. Go to my YouTube homepage, join the link. All right. I will give my analysis before I leave. Hope to see you in there. If not, I'll see you.